Okay, let's start with closing entries. Upon completing this chapter, you should be able to prepare closing entries, okay, to be transferred to financial statements. In accounting, we should record all transactions first in journal entries, and then we should prepare each of the T account or ledgers for all the account for each transaction that involve, and then from the T account we have to balance off the account, and the balancing figures we should transfer it to the trial balance. Okay, at the end of accounting period, at the end of the 12th month, all nominal accounts, income and expenses are closed, and the balance are transferred to the statement of profit or loss. Okay, and then for asset, liabilities and capital account are balanced at the end of the accounting period, and the balance are transferred to the statement of financial position. The closing entries for income should be debit income account, any income account, for example, interest income, sales, and for example, rental income should be debited, and then credit should be statement of profit or loss, meaning that all the income account, all the income figures, closing figures should be transferred to statement of profit or loss. These are the example of the ledgers for income or the T account of income account. Okay, for example, sales account. Okay, during January 1st, it incurred sales of cash sales for 100, and for January 31st, it incurred credit sales of 1,600. And at the end, the closing balance that should be transferred to statement of profit or loss is the balancing figure 1,700. Okay, same goes to the rent received, or can also be written as rental income account. Okay, in January 1st, it received a rental income of 500, and January 31st, the business received rental income in by check 500 ringgit. So the total rental income for the month is 1,000, and as a balancing figure, it should be transferred to statement of profit or loss because it is income. On the other hand, the closing entries for expenses account should be debit statement of profit or loss, and then credit expense account. The example of expense account can be maybe a maintenance expenses or rental expenses or interest expenses, it can be, and also purchase account. So these are the example of expenses income that should be closed off and then transferred to statement of profit or loss in order to determine the net profit of the business for the year. Okay, for example, in this slide we have purchase account and salary expenses account. Purchase account is considered as part of cost of goods sold, so it should be treated under the expense accounts lah. Okay, for example, in January 28, the business made a purchase by check 1,000, and then it should be closed and transferred to statement of profit or loss at the end of the year. And then same goes to the salary account. They incur salary expenses on 28 January, amounting to 600 ringgit and paid by check. So it should be closed off at the end of the year and then transfer to statement of profit or loss. Okay. Just now we just mentioned about the closing entries for nominal account, which is the income and expenses account. But then we still have other account, which is asset, liability, and capital that should be closed off and transferred to statement of financial position, which we will continue in the next presentation.